As you can see, the Dow moving into positive territory. Welcome back to halftime. It's now time for our call of the day. It's Nike, downgraded to hold from buy at Jefferies ahead of earnings on Thursday. Shares are down 11% in September alone. Joe, you own this one.
Well, let me be clear. This is in the quality momentum strategy, so it is a position held in the JOTI ETF. It's a position that was put into the ETF back in the spring of this year. It went into the ETF. It was really more of a reaction to the positive momentum that Nike experienced off of last October's low through the spring. I've spoken over the last several weeks about the fundamental deterioration that you're seeing for the business, the challenges that they have as it relates to China. They're going to report earnings this Thursday after the bell. We'll learn a little bit more. As far as what we do with the position, on October 31st, we'll find out if it's a trick or if it's a treat. We all know what it looks like from a technical perspective right now. But I think overall, what's important to understand is when you think about apparel and footwear, think about the entirety of the category. It is clearly right now up against some significant challenges. And the challenges come in the form of a consumer that clearly has to be more cost conscious. The evidence to that is the back to school season. Athletic footwear had a disappointing back to school season. Generally, when you have disappointment in the back to school season, that means you have a lot of promotions heading into the holiday season. The holiday season sets up the disappoint as well. So I think the entire category of apparel and footwear is really going to have some difficulties as we move towards the end of the year. And Nike's been nothing more than a proxy for that over the last couple of months.
Yeah, I mean, we're talking about the stock being under pressure in September. Had a few price target cuts. Wells Fargo last week from 130 down to 120. HSBC from 120 down to 113. But I just want to put this in context. The mean price target on the street is 123. Stock's trading at about $90 right now. That's still an upside of more than 30%. So with so much, I mean, your point.
Yeah, but let's remember, Frank, this began in the spring with Foot Locker. So if you could pull up a chart of Foot Locker, you'll see it had two significant gaps, one in the spring and then one again in the middle of the summer. Why? Because Foot Locker was telegraphing the type of weakness that we're seeing currently and the weakness that's going to be coming in coming quarters.
Is some of that weakness also coming from Foot Locker transforming its business? I mean, it's closing stores.
That's fair. I think it's fair. But listen, the word you never want to hear if you are a retailer in apparel and footwear is promotions. And there's going to be heavy promotions to work off a lot of that inventory.
So, Shannon, coming over to you. I mean, there's obviously a lot of talk about the consumer being very much stretched right now. We are going into the holiday season. Do you expect Nike's sales to continue to be under pressure, deep discounting, as Joe's trying to point out right now?
Well, I think Nike's been very much focused over the last couple of years in reducing the slippage in its business. And so if you think about the direct-to-consumer business for Nike, that's increasingly important because they don't have that intermediary. And so the margin recapture potentially from moving, more of their business to direct-to-consumer, it's important in that way. Secondly, even without that slippage, to Joe's point, we have a consumer who's likely to be very thoughtful and concerned coming into this holiday season. And so if you look at some of the challenges that other retailers have expressed, it's been a mismatch between, what they have on the shelves and what consumers are looking for. And so I think inventories are going to be in focus, but I think this direct-to-consumer aspect of the Nike business is going to be increasingly important because it gives them an additional lever in terms of consumer demand and potentially could mitigate that longer-term risk in terms of promotional activity.